So I am the regional director with Sharestates. We are a leading national private lender. We specialize in fix and flip, rental loans, single family, multifamily, mixed use commercial properties, anything investor related. Myself, I've started my career back in the 1980s on Wall Street and then changed paths for a couple of decades managing media companies, but I did circle back to finance and found my way into private lending. And this has been by far the best career that I've had in my life. I'm happy to be here. We are based in New York, Long Island, but I did relocate to Florida 2 years ago this month to Celebration. And this is where I right now have a satellite office. I'm not going to go too deep in this, but I think it's important that we kind of start the foundation of this conversation with what's going on in the economy. Naturally, the economy has been showing signs of weakness, and it probably will continue to do so over the next couple of years. Obviously, as we know, inflation is at a 40-year high. Fuel prices are at a peak. However, unemployment is low, but the problem is the wages that are there are way below the inflation rate. Those wages are also so low where people can't afford mortgages. First-time home buyers are out of the market now. The rents are too high. So wages are an issue right now. As we know, also, the Fed's going to be increasing interest rates throughout the remainder of the year and already have raised them, but now will continue to do so, which will affect all of us as well. Bottom line, consumer confidence is low, and we know that. So this is what kind of summarizing where we are with the economy. How is the overall economy affecting real estate? As we know, home prices are at an all-time high. There's no question about that. However, due with the increase in interest rates and the stagnant wage growth and inflation, we're starting to see how it's impacting home buying. Home purchase demand is declining. Loan applications, as you know, are down. And we're starting to see inventory coming up. And with this, something else I'm seeing every day is price reductions are happening, as well as big increase in canceled contracts. We also see COVID migration, obviously, is slowing down. That is also lowering certain demand. And also, this has been an interesting factor, is that we're not seeing the exorbitant amount of offers that are coming on each and every deal. We're not seeing the 15 or 20 offers on every house. Now we're seeing on average somewhere from 2 to 5 per home. So the battle to purchase are not as strong as they were a year ago. Because of all this, consumers are less likely to make big purchases, and existing homeowners are less inclined to sell because they either got a good interest rate and or they see the price values coming down. So that right now it's starting to shift from the seller's market a little bit. Interesting factor is home builders. They are trying to keep pace with the inventory demand. This is especially prevalent in Florida, as we know, especially in certain markets like Ocala, Jacksonville, the Orlando market here, Port St. Lucie, the Tampa suburbs, Lakeland, Naples, Cape Coral area. There is an abundance of new homes that's going to be coming on the market here in the next year or two that's going to put pressure on that inventory and maybe bring things back to a level field. The main thing is that affordable homes will be in demand. There's no question about it, because right now, even though home prices are starting to come down, I think they're still way high. I think they're way overvalued compared to where they probably should be. So I think at some point we're going to see affordable homes start pricing a little more where they should. Nevertheless, sellers will continue to make profits. And that's kind of the main thing still in this real estate market. Despite everything else, there is still money to be made. So what does this mean for investments and real estate investors specifically? There's no question that investors have taken advantage of what happened throughout COVID. They took advantage of the low interest rates and the market affordability. They took advantage of it in huge ways, largest amount of investors the country's ever seen. In large part to institutional type investors. There's some larger companies out there that have bought literally billions and billions of dollars of rental properties all throughout the country. That has created some of this housing demand throughout, and as well as the higher home prices. In fact, last year, 25% of all homes in Florida were bought by investors. In certain markets, much more than others. Investment markets are huge right now, especially in Florida. And that includes foreign investors. From what I understand, about 20% of all the investments were foreign investors. In 2022, we're seeing investor purchases dropping. They're starting to fall. However, investors are active. And so what's happening is that those larger institutions that I mentioned earlier that were gobbling up, they're pulling back. Some of them are stopping completely. Some are pulling back considerably. But who's getting involved are your investors with smaller portfolios who own like 2 to 10 properties. They're the ones are active. They're the ones taking advantage of it. And so that's why there is still more activity than ever. Just now the institutions have left. These are the people, by the way, that you will be working with. These are the ones that you hear about, that you can get deals from. So just be mindful that these are the people that are going to continue to invest, especially in Florida. And they're going to continue despite profit margins decreasing. Even though they're decreasing, there's still a healthy ROI. That ROI will still be there. However, the investor has to be more careful than they did maybe a year or two ago when they can just buy anything. They have to do their research. You're going to have to make sure that that home is something of value and they will be able to make money on it. However, there is still plenty out there and there's still plenty of money to be made despite what's happened in this market. Higher interest rates will start pricing many potential home buyers out of the market, which we already know. And so they're going to be able to take advantage of that in some cases. That's why I put that there. We also starting to see foreclosures increasing. There's no way that it's going to come anywhere near what we saw in the Great Recession in terms of amount of foreclosures. Nevertheless, investors seize upon those kind of opportunities and they will jump in and they will take advantage of those and make it into either a flip or a property to buy and hold or rent. New construction, as I mentioned earlier, is way up and rents are at an all-time high. So investors are still getting into the game in these sectors as well, obviously in the new construction and the rentals. Those rentals include your vacation rentals and your other Airbnbs. So those are prevalent than ever, and those are making quite a bit of money. And here, this is an old saying that inflationary times, when there is inflation, it makes a smart investment strategy because if you do it right, you will start generating passive income. And that's what you can do during times of inflation is continue to have that passive income. So it's another great opportunity. This is what investors know and they get involved. At the end of the day, investors will seize upon these opportunities. They know it, they smell it, and they're more active than ever. So this is why companies like us are now in this game. And we have actually right now, as we speak, Sharestates has more activity than we've had in 3 or 4 years. It's been amazing. Okay, so just a real rundown, a little bit about Sharestates. I'm not going to go too deep into this. I mentioned earlier, we were founded in New York, Great Neck, Long Island, to be more specific, in 2014. The main thing here is that our company was founded by real estate veterans, meaning that the founders, we started a title company 22 years ago. They were real estate agents, real estate investors, flippers, real estate attorneys. So everybody who founded our company were actually on the real estate end, not like from a bank or from other financing or mortgages, whatever it is. So we came from the real estate side. So we get it. We know it. We understand what real estate really is. And so I think that's really one of the key elements. I don't think there's any other private lending institution out there that has been created by those from the real estate end. And as I mentioned, we only deal with real estate investment properties, and it's for investors and developers. We do specialize in fix and flips, ground up construction, rehabs, rentals, things like that. As I mentioned earlier, we'll get into more details in a little while. We are still one of the fastest growing national private lenders in the country. We are very broker friendly and we have a white labeling option for brokers as well, which I'll get into in a little bit as well. Up to date, we funded over $3.3 billion in projects nationwide. That could be a big number or a small number to you, I'm not sure. But you have to keep in mind that the average deal throughout that time has been $750,000. So we have a lot of deals on the table. Now, I want to get into why people would use us or use private lending versus their traditional or conventional type lenders. First and foremost, the qualifications. We are so much less stringent than a bank or a conventional lender. Speed is one of the most important things to an investor. They want to get the deal. They want to close the deal. They want to get the income moving, or they want to get the rehab going so they can flip the house. So speed is everything. As we know, many banks, not all, but many banks take a long time to actually close the deal. It's like going through molasses, and they ask for a lot of things. Private lenders like us, we only ask for a few things just to get approved. All we want to know is their FICO and real estate investment experience. Those are the criteria that we look for just to kind of get the approval process started. Naturally, if it's going to be a purchase or something like that, we want to see some liquidity, but it's so much different than going through a bank. We also don't verify income. We don't look for income taxes. We don't look at other net worth and other investments. We really are more concerned about the credit score, the real estate investment, and naturally the property. The property has to make sense and the deal has to make sense. In our space, we also have few to no regulations. This is still an unregulated space that we're in. With that said, we are run by attorneys and they keep us compliant and self-regulated. So we do still play within a guideline that is correct and fair. Another reason why they come to us is that there's more money to close larger deals. We can lend up to $25 million on deals. And there's other private lenders that go up to $100 million. Banks really don't like those levels. We can also process unlimited loans per borrower. This is a big deal because borrowers has a portfolio, has deals. One bank doesn't like to do maybe 2 or 3 max deals per borrower. Us, the more the merrier. We like to see that. We want to see that. That's actually a good thing. Speed. We want to get things closed, and we do close. Most of our closing lasts anywhere from 2 to 6 weeks, just depending on the complexity of the deal. But the thing is, we can close them and close them relatively quickly. The underwriting process, when you go through people like us, it's so much easier and convenient than going through a conventional and traditional lender. And as I mentioned earlier, we can fund as many loans as you need. So these are some of the elements why people will use us, private lending. But one of the other major parts, and I'm going to it right next, is that we're broker friendly. Being broker friendly means that we have a process set up where a broker can bring a deal to the table. We actually white label it, which I'll get into in a second, and make the process smooth through it all and get it done. And you'll be in full communication with our team through the process and get it to a close. As I mentioned earlier, why broker through us? Well, one, by bringing investors to the table, not just your traditional home buyers, but if you're bringing investors to the table, you're creating new revenue streams, you're adding more value to your services. And with our white labeling program, you can add your company brand and logo on everything that we have, the loan applications, our marketing flyers. It's going to be on our term sheets. It's everything from beginning to end. And this, at the end of the day, will protect also the broker-client relationship, preventing the client going around you and coming to us directly. We prevent that. Also, in addition, you close the deal with our capital. That is, if you're a lender. You have access to all of our loan programs. There's an online portal. You can submit loan applications. You can see where a loan is in the process. We have a very systematic online portal. We also have a VIP program. That is, if there's larger transactional volume, you get special rewards on rates and origination and other aspects. And we really offer what we like to say a customer journey, a beginning to end efficient process. And the process kind of looks like this. I'm not going to go through it all, but this is kind of a roadmap. It takes you from the application to the closing, and we have a team. So when you work with me, when you work with us, you're going to have a team starting with me. I have an assistant. That assistant goes to the processor. The processor will take you through that, and the assistant will help you as well. Gets you to the underwriter and gets you to our closing desk and funding. But the thing is, you will know who the team players are. I will be involved in that whole process. At least I'll be notified of everything going on with that process to make sure that it goes smoothly. So it's a really nice roadmap of how we work with all of our clients. All right, so let's take a quick peek at some of our products. There's more detail to this. Nevertheless, this will give you kind of an overview. On the left side, you see we have a bridge loan, which is basically our fix and flip product. That also goes with some light rehabs. Right now, rates are starting at over 10%, which is still very competitive in the private lending sector. We have our loans go from 12 to 24 months on that typically. The asset types, single family, multifamily, mixed use, and there's some commercial that we can do as well on that. Loan amounts can go anywhere. We start at 100 grand, go up to 20 million. We can offer up to 85% of a purchase and up to 100% on the rehab costs. And the minimum FICO score is 620. So we really aren't asking for much here. And it says they experienced one prior similar project. We like to see some experience, some sort of track record. Although we can do first-time fix and flippers, the leverage will be lower and the rate will be a little higher, but we can do that. We got ground-up construction. This is obviously a very, very popular program these days. Again, the rate's starting in the 10s. We go up to 24 months on that. Single family, multifamily, mixed use. We can do some commercial. Loan amounts, we go up to 20 million. We can loan up to 65% of the land purchase or refinance. We still can lend up to 100% of the construction. That's going to be based on their track record. They have to have at least 3 prior similar ground up projects for us to consider lending to that borrower. And we do require a minimum 680 FICO score. And then we have the term loans. This is our 30-year product. This is for rental properties only. The rates start in the high 6s. The asset classes are single family, multifamily up to 10 units, short-term rentals, as I mentioned earlier, the Airbnbs and vacation rentals, and portfolio loans. So if they want to group a bunch of their properties together and do one purchase or refinance, we do those as well. Loan amounts start at 150, go up to about 3 million. So if you want to do a max purchase, is going to be 75%. The cash out's going to be maxing out at 75%. And on refinances for rentals, we do have a DSCR requirement. The minimum right now is 1.10, and the minimum FICO is 660 for our term loans. Like the others, we do want some track record, some experience to do that. If they own the primary home, we can use that as experience. And we can go into that in more detail later. Other guidelines that we have, just so you know, investment properties only, these are non-owner occupied. These are in non-rural areas. Every deal must be in an entity. That's an LLC corporation. No income verification, no income tax records required. We do full conforming appraisals on every deal. And we lend nationwide, except for Alaska, Oregon, the Dakotas, Nevada, Vermont, Minnesota, and Utah. And what does that mean to you? That is, we are licensed in 43 states. And so if you should get a deal or hear about a deal in another state, it could be neighboring state, Georgia, it could be Alabama, or even California, Texas, it doesn't matter. Since we are the licensed, you can actually broker a deal with us with any other state. So just please keep that in mind. Now, this is something pretty exciting, which I just found out about yesterday. I added this slide this morning because this is a game changer. Sharestates has been staying in their lane for 8 years right now. We know what we do. We are very good at those, but we've decided to make a pivot. And that is, we're going to still stay in that lane with what we know, but we're going to broaden our bag of goodies. And so now, coming soon, these are some of the products that will be coming. And please make note, because these come up all the time, and now we'll be able to finance them. We're talking foreign nationals. This is very, very prevalent, especially in the state of Florida, more specifically South Florida. In the Orlando markets, there's a huge amount of foreign national business. And so now we'll be able to do that. First-time investors, but now we can broaden that brush a little bit with what they'd like to do. Modular homes and manufactured homes. These are things that, to me, come up almost every day for years. And now I am like so excited. This is a whole new thing. Now, I don't have all the details on every one of these products, but these are assets and these are things that we'll be able to do starting this week. Rural properties. I just mentioned we only do non-rural. Well, now we're going to have an option to do rural properties. Hospitality. That means hotels and motels. This is something very big. And so very excited to be getting into that. Owner-occupied investment property. Mobile home parks. Assisted living facilities and any senior facilities. Self-storage. Not only just self-storage, we do also offer office, warehouse, light industrial, and small strip centers, retail. So we do those types of commercial loans as well. And then mixed use. Mixed use, I put this here because right now we do mixed use, but that's only if it's greater than 50% residential. Well, now we're going to be able to do it when there's less than 50% residential. It's pretty big for us. So very exciting, whole bunch of things coming down the pipe. So if you get any of these types of deals, now there's a chance we can. Track record is going to be important on that, by the way. Experience is going to be important. All right. So how do you register? How do you become a broker with us? I would recommend, there is an online portal that you can go in. However, I would also recommend that you reach out to me personally so I can kind of guide you a little bit. And then I can personally set you up as a white label broker. There's no obligation, by the way. All we need is your logo and contact information, and I can get you into the system, and then you're all set up. There's something on there, register today, sharestates.com, get started. That's fine. You can definitely do that, but I would also recommend just email me directly. Here's my contact information. That is my phone number, 516-492-5358. That's the only phone number I have. I use it for everything. You can text me, call me at any time. You can email me at sevans@sharestates.com, and you can reach me on my WhatsApp chat. And so that is the presentation. I hope there are some questions.
No, we do have a few, Scott. So let me ask a couple of things that we have from the chat. First, we're asked on the fix and flip program, is a full appraisal the walkthrough required? Can you talk about the appraisal requirements on fix and flip, what you require to establish value?
Yes, actually, excellent question. Up to a month ago, we required a full appraisal on every single deal. However, a month ago, we actually were able to make adjustments to that. And now on our fix and flip, not all, but depending on the scenario and the location, we can do a BPO on a flip. So that will tremendously help the speed of the process of getting that deal closed. So we can do a BPO on a flip.
Excellent. We got another question from Gustavo. Can they finance a deal involving cannabis business?
Yeah, good question again. No, at this point, we do not. There is a handful of special private lenders out there that specialize in that, but almost all of us have not entered that yet.
Excellent. Here's a question I get a lot on the short-term rental stuff. Can you talk about on your DSCR how you establish that rental income?
Yeah, that's a good,
particularly on a purchase.
Yeah, that's a good question. Yeah, because the numbers coming from a vacation rental Airbnb doesn't even compare to a standard rental. So what we have to do is just go by fair market value rent. We're fully aware of the income coming in. So the DSCR doesn't even come into play. We just kind of go by the fair market value.
Perfect. Great. Got a question on here. What is lender compensation? I guess I talked about what they can charge and what you compensate.
Yep. Excellent question. As a lender, we charge anywhere from 1 to 2 points on every deal, just depending on the size of the loan. If it's a $100,000 loan, we're going to be at 2 points because there's hardly any money to be made anyway. But anything higher, very negotiable, and we get down to 1 point. And then the broker can charge anywhere up to 3 points typically on a deal. Bottom line is that when it comes down to origination, we don't want to price out the borrower. And so we don't want to be charging the borrower 5, 6, 7 points. It just doesn't make any sense. So we like to keep that at a level, at a range that makes sense for everybody, to win for the broker, win for the lender, and more importantly, win for the borrower.
Excellent. If you have any further questions, please put them in the chat and we can review those. Scott, you talked, what was the number? Something billion you guys have funded so far?
Yeah, 3
Can you break that out? What are the kind of deals you see on a normal basis versus the kind of niche stuff they do from time to time? So like, what is the core that you see as far as deals coming in, maybe specifically to the Southeast?
Yeah. Well, up to the beginning of 2022, the end of 2021, for several years there, 75 to 80% of all of our deals coming in were rental loans. That is the 30-year products. Largely were refinancing. People are just taking advantage of the low rates, right? So that was 80% of it. Large portfolio loans, purchases. I mean, it was everything. Obviously, that flipped completely. And starting in February of this year, that sifted out. And now we are closer to about 75 to 80% bridge loans. And on that bridge, we are seeing a considerable amount of flips, but we're seeing a great deal amount of ground up construction, rehab projects, and refinances on the bridge side, which is because the rates are
they
so
not
high.
Quite done?
Yeah. But yeah, I'd say the ground up constructions and the flips are very active right now.
Great.
All over the country, but Southeast especially.
Right. We have a question about how you work with individual clients. So this asks, do you work directly with loan officers, or do they have to work underneath a mortgage broker? Can you take straight referrals, or do you need to set up accounts, or how do you work with different clients?
Yeah, good question. I didn't get into that specifically. That was an excellent question. So we have options. Even as a loan officer, if you want, you can broker it. But the thing is, you would have to get approval, I think, with your company.
Right.
So what we do is we offer referrals. So we do have a referral program, and you can get up to 1, maybe up to 2 points on the deal, just depending on the size of the loan. But we do have an entire full referral program.
Okay. And they should just reach out to you to get plugged into that. Right.
Yeah, in fact, I had one just before I started this webinar. A referral came in, and it worked out perfect. So,
excellent. We just had a question come in. How is your relationship with real estate brokers?
Yeah, very similar to the answer I just gave. Brokers bring us as a company deals all the time. Look, real estate brokers are just as connected in this place than anybody else. So what we do is we set up a referral program because they're just passing the deal on. Hey,
Right.
Look, if they want to broker the deal, they can, but it's not in their wheelhouse. But we encourage that. In fact, I should mention, because again, we are real estate people that began this, we like to be connected with anybody in the real estate area, whether it be the brokers or the agents or the title company or the builders. Anyone in the space is connected with the investor in the investor world, and everybody can make a little piece out of it. So the bottom line is finding a lender who can actually close the loan, and then people can reap the reward.
Excellent.
One thing I would bring up, Scott, you had mentioned, which I think is very important, being that these are investment properties generally, not including your new products, that all the states that your company is licensed in, they will be able to do loans in those states for these specific loans.
That is correct. That is correct.
I think that's a huge thing, everybody out there, because now all of a sudden your reach is now almost the entire United States. And again, they have to be investment, and then you don't fall under the TRID guidelines, or it's a whole set of different rules and protocol.
Mhm.
So for those that are looking to expand their business, and now is a good time with everything in a downturn, this might be an exit strategy to do something different in your mortgage career.
I just had a question come in, Scott. This is going to depend on the type of loan they're doing, I would assume, but it says, do you base loans off of purchase price or appraised value?
Okay, yeah, it depends on the kind of loan, because we're going to go off the appraised value. There's no question about it. But if it's a purchase, if it's $100,000, we're going to loan on that 100 grand. However, if there is a after repair value or a refinance of a certain value, we're going to go off that appraised value. Yes, absolutely.
Right.
But if it's a purchase, we just go off the purchase. But if there's
And I think I saw in your notes on your fix and flip and constructions, you cover 100% of the construction costs.
Yes, so we can lend up to 100% of the construction costs, all just
Right.
depending on the track record of the borrower.
Perfect. Great. And then I just had a comment that came in. I've asked to copy the information the program's discussed. Yes, we're going to send you over some resources with the presentation, the recording, obviously Scott's information. You'll have information to his website. They got a great website, very comprehensive website that you can visit, which I believe is just sharestates.com. And you get a ton of information there as well. But yeah, we'll send that out to all the attendees today.
Perfect.
All right. With that, I think we've covered all the questions that have come in. I'm getting a lot of thank yous coming in. So great job today, Scott. We really appreciate that. I think what we'll do is maybe we'll schedule you once you got some updates on the new product line. We'd love to invite you back on, and you can go over updates of what you have at that point. So, yeah.
Well, I'd be happy to. I'm ecstatic. I'm excited as could be.
You're going to be busy.
Yeah, we already are. So it's even better.
Fantastic. Well, we appreciate your time today, Scott. We can't thank you enough. People that have attended the call, we really appreciate you taking time out of your morning to be on the call. Again, lots of events coming up. We encourage you to become a member. Please reach out, get onto our site, fampgoldcoast.org, and get lots of information on the chapter. Again, we're going to share Scott's information. Please visit their site. We all run into these deals from time to time, so reach out to Scott and he'll point you in the right direction.
That's it.
Scott, thank you for your time today. Everyone have a great day and be well.
All right. Have a great day, everybody. Thank you very much. Appreciate it.
Great webinar. Do more like this.
There you go. Do more webinars, you said. So
Love it. I love it.
great job. Thank you, guys. Have a great day.
Thank you.
Thank you much.